Welcome back, it's Nick. Thanks for hopping on, taking a quick look at some AMC technical analysis. This one will be a short video. Feeling like complete crap from the weekend festivities. Just had to travel out of town to visit some friends out of state for their wedding and get some celebratory events in, but of course kind of going around those types of scenes, you can come back with some sickness, and I've felt completely under the weather for the past 24, 48-ish hours, so just kind of taking it easy, give my body a rest, just listening to what it needs. So appreciate you guys' patience with Twitter and kind of staying up to speed there. I'm trying to incorporate more intraday updates going forward, just because the good, the bad, the ugly, all needs to be up to speed. So obviously come Friday, we saw some activities that I said could take place once we kind of reach that mid 18 level to upper 18s. So just want to give some quick light to that. Some different scenarios I'm looking at this week with FOMC on Wednesday, and getting into more technical analysis based on volume and different things of that nature. So as always, not a licensed financial advisor. Do hold my Series 763 and my SIE, so take what I say with a grain of salt. It's all just educated opinion here. So I wanted to start a little bit further on the time frames just to kind of give you that perspective from the VPR standpoint. I like to hit on this a lot. It just shows kind of strong volumes within the volume analysis, where most buying takes place in regards to different parts of the schematics and where our support and resistances come into play. So obviously I'll get into this kind of downtick off of the top of this 18 mark here, why it kind of seemed to just slice through and how different factors kind of played into that. I hit on it in previous videos, but I don't want you to kind of continue to reference these if you haven't watched them before. So I'll just kind of start from the get-go here. First, I just started on this yearly time frame, 2 years, 1 day candles, just to give you some perspective on VPR. I just wanted to kind of notate this 1475 mark. I've referenced this before in different tweets and things of that nature, so just want to give you that visual where some of our highest VPR is, along with this pocket down beneath and underneath that. So I want to reference this point because there've been some extreme selling pressure going on. You can kind of see the RSI dropping down to some low levels off the tops there. That was one thing I mentioned in tweets later in the week last week. The RSI both on the 4-hour and the 1 day were getting a little bit hot. It just kind of allows shorts to have more of a catch point to pull us off tops of key ranges there. So a few things kind of played into this as we get into the lower time frames. I will zoom in on the daily because there is some things I want to make you guys aware of real quick. So yes, they yanked it off the top. No, I didn't enjoy watching it, but there is some things that we can pull from this as to possible good scenarios for us going forward. I mentioned that on Twitter they could drop us sub 10% on Friday to trigger SSR, which they did. And then coming into today, I mean, they kind of pinned us down within that 1480 to 1490 range the majority of the day. So it's a mixture of a couple of things. One, kind of just sideways trading on the broad market. And then two, there's just not a lot of demand coming off of that Friday close. So the one thing that does intrigue me is that they did leave a gap, and I'm going to leave this kind of here. I know it doesn't add up to the top of here with today's open, or sorry, Friday's open, but once we get into the 4-hour, you'll understand why that gap is kind of sitting there in that time frame. But a few things to notate is that they did slip it underneath the standard deviation line on the daily, which of course isn't something we want to see. I do like that we're still trading above the 50 EMA going into tomorrow and rest of week. I think this point is going to be pretty important because you got that 1475 mark, which is right around here, basically came down and tapped it today. And if you look to the left here, how important 1475 is with this crosshair, you'll kind of notice that it has been acting as an intraday support slash resistance line, but what I think they may try and do tomorrow, we had 20 million volume today. We haven't seen volume that low since November of last year. Even leading up to this run up into the 34s into March, we haven't seen anything quite to that extreme. So to me, this kind of defaults back to market makers kind of pulling the supply. Whenever they're flipped over on a trade, you usually see a deep supply pull to kind of, what's the word I'm looking for, mitigate risk on their side, but also give the illusion that there's no demand left within the security, so that it kind of gets this drag down type of volume. So when you see something like this, and you'll notice it more on the volume when we get into the 4 hour where it plays into a factor here, it's gonna appear as if the tape is telling the story, but with anything on AMC or any of these memes, you'll kind of understand that that's not always the case. So as we get into this, going into tomorrow, I could potentially see them early on. I wouldn't like to see this come down and tap this 50 EMA mark around 1460, 1455-ish range. Most likely this will take place within pre-market if the broad market's not doing the best. So I just want to reference this point. So around 1460 to 1475 is a zone of strong support, but it also is a zone that they may try to come down and touch before we kind of get that push up that I'm looking for later this week. So we'll get into the 180-day 4 hour. I'll take off this VPR real quick because there is some very interesting things taking place here that I want to make note of as we go forward, because a lot of people are kind of seeing this style of movement and thinking it's just going to be some range-bound event for the foreseeable future, which there's a possibility of it, but I just like being honest within technical analysis on things that I'm seeing. So if you've been watching my videos, a big thing that I hit on is your 50 EMA, your 200 SMA, and your standard deviation lines. So when we get in here, you'll kind of see one thing I mentioned on Friday is that I don't want your standard deviation line crossing under your 50 EMA, because what that can do is near-term wise, that's just a big technical crossover for them to kind of get more downward pressure, giving us a harder time to break the momentum back to the upside. And if we zoom out, I'm trying to get this volume down underneath to give you more perspective here. If we zoom out here, there's been a couple times where this has occurred and it's been a slight blimp down before they give us the release pressure back up. So back in end of June last year, we kind of got this pop up where we got the crossover, popped up, got a little bit range bound with this regression channel, and then came back down, and they did slip it momentarily here to get the standard deviation line underneath that 50 EMA. What intrigues me though is that it was very short-lived, meaning that they got it underneath here, and I mentioned during this time too is that they could slip it underneath, give you that retest of a bottom of the 200 SMA, and then push it back up. So this is a good example of kind of pulling the supply and then the demand stepping back in. So that's really what I'm looking for here, is we're getting that touch on the standard deviation line with the 50 EMA. So when I mentioned on the daily that we could slip down about 1475 mark to 1460 range, there's a chance that that occurs tomorrow, to where we go back and kind of retest some of these bottom wicks here intraday. If it happens, I think it'll be early on. The gap is more than filled to the downside. So if this does occur, I could see us kind of trading simultaneously with each other, like these lines kind of intersecting. It does give us some good upward momentum when these coil like that. So I'd like to kind of see carved out here, another kind of rectangular shape on your support lines. So when that occurs, usually you see your strongest demand step in. Coming into tomorrow, with it being a Tuesday off of last week's expiration, I'm not expecting anything too crazy, but I do expect them to kind of pull this down just a little bit in the pre-market. I don't want to leave a gap here, so I'd like them to pull it down and then kind of curve our way back up, maybe open near this 1490 range, 1495. I know we closed at 1491, but I just want to see kind of another carve out here and to get back into this trading channel. So I'm forecasting that tomorrow to where we kind of see a lower open push back up into the mid 15s, around 1530, 1540, and kind of get a little bit of sideways consolidation trading here with a little bit more volume, so maybe 30, 35 million into tomorrow, leading up into FOMC on Wednesday. And this Wednesday mark is where I think it's really going to be important. So what did happen is that close on Thursday into Friday open, they left a gap to the upside here too. About 1680 is that gap fill roughly, 1682. So tomorrow, like I said, not expecting anything too crazy, maybe low to mid 15s, and then more of a consolidation right above this trading zone, kind of curling these two down with each other. And then come Wednesday, a lot of people are eyeing this FOMC meeting. I've heard a lot of different things potentially taking place. My best case scenario is that I think JP is really going to want to pump the markets, but also the CPI data is backwards looking. So to see that come in at a higher number, I honestly expect the Feds to lower their expectations in regards to Fed rate hikes. So I think, this is going to sound crazy, but I think it could potentially come in at a 0.5, most likely 0.75. But if it comes in at a 0.5 due to that kind of CPI data and different sectors forecasting a slow of inflation, that could be an extreme catalyst for the overall market along with AMC. So if we're trading in the mid 15s to around 1530 range come open on FOMC day for Wednesday, I think Wednesday is where we're going to see some of our explosive movement back to the upside, maybe get back into this channel here to where we could test that 16 mark and then start our upwards channel back into Thursday and Friday. I don't think we're going to hang out down here long. I think this is very aggressive short selling, mainly due to GameStop post-dividend split on Friday. I kind of mentioned that this could happen, not quite to this extreme, but when they got some key technical breaks to the downside, they kind of just hit the bid as hard as they could, along with that expiration on Friday. So seeing this, I mentioned that sometimes it can be hard to turn the boat around once you get those gap fills with this kind of extreme short pressure to the downside. But if you notice today on that low 20 mil volume, that's a good signifying factor that shorts are exhausted, meaning we got our RSI cool off, but our OBV stayed relatively up. Like if you zoom out, we're still at a higher OBV than where we were during that 34 run, or right at it. So that's extremely enticing to me. You don't see any deep spikes down on the OBV mark. It's just this nice cool off of resistance, or sorry, RSI. So when we get this, like I said, if we get that little blip down in pre-market, we could even get an oversold signal on the RSI on the 4 hour, which would give us just even more momentum back to the upside to start that curl back up. So for an overall kind of week perspective, I'll get a more in-depth analysis video out tomorrow when I'm kind of feeling a little bit better. I just want to hop on and give you some quick TA. But what I'm seeing is kind of carving out this bottom. We got those deep stairs down, which is what shorts love to do when they get some momentum. We should get this bottom carved out and trade above this 1515 up to the 1545 mark tomorrow, somewhere within this range, nothing too crazy. Then come Wednesday is when we'll get our big volume spike, in my opinion. I think FOMC will be bullish for the overall markets, and we may even get that push back through 16 into this channel, maybe test 1635 range. And then come Thursday and Friday is where we'll see more continuation of this movement, because GameStop shares from the dividend a lot of the custodians, meaning brokerage accounts, don't even have those shares allocated within their clearing accounts. So when those shares start hitting the tape, I think GameStop's going to start making its move into tomorrow, along with Wednesday as well. You got Bed Bath Beyond, COS, all these memes kind of starting to pop off, showing that the basket's getting a little bit uncontrollable. And of course, usually AMC and GameStop are some of the last ones you see kind of start moving in that direction. So I want to say this deep short pressure is kind of in preparation for that. So when it does move, it can kind of start from a lower low and then give it, and this is in their eyes, give it less velocity to the upside. But you'll see real quick when AMC and GameStop start gaining that traction that a lot of these COS and BBY or Bed Bath & Beyond are seeing, you'll see just how aggressive these can be, because I think we're approaching this carved out bottom here and kind of just solidifying this demand zone to push us back to the upside. Because we tested a supply zone, now we're back kind of in a demand zone if you look back historically, and we should start curling back up. We could see this test around 1630, 1640 and then break to the upside. I don't know if it's going to occur this week, but we just got to kind of work through this chop in the meantime. And then I really think later in the week is when we're going to be pressing these potentially upper 17 marks, give us that kind of push back up before earnings. And then this is when it's really going to start getting more volatile. So they're pulling that volume off the tape, kind of giving it perception that the demand is leaving, but that's usually what they like to do so that they can kind of allow this thing to lift its lids in kind of unexpected scenarios. So again, quick video, but they will most likely carve this out just a little bit deeper here and keep this cross from occurring, in my opinion. So like I said, expect around 1460, 1475 push in the pre-market tomorrow, and then we'll start this ascension back up. And then I fully expect this gap to be filled this week. So end of week, I'd like to close above 1640, 1635. I think there's a big reason why they're not letting weekly candles kind of close up here. But end of the month, you usually always see kind of AMC get that nice little push. So there's a lot of things pointing to this cool off just being a factor that the shorts are trying to control this thing from kind of taking off in more of an upside trajectory. So that's kind of my analysis for beginning of the week. I know it's really rough, kind of dry. I'm just trying to get over this sickness and keep this information flowing out to you guys. So I'll add something more detail oriented come tomorrow and the following days. I just wanted to get that analysis out to you real quick. So looking for kind of sideways trading, a little bit higher volume tomorrow. This low volume sell-off just shows me that the shorts are getting exhausted. Same with Friday, just very exaggerated short selling from the post-split news. So end of day Tuesday into Wednesday and Thursday being the most bullish days. That's kind of what I'm looking at along with FOMC. So I'll keep this updated as much as I can with projections. Just keep an eye on the YouTube. If you could, leave a like, comment, and subscribe. That just helps it kind of get more eyes to more people. But macro-wise, we're still in an uptrend. I don't mind this cool-off on the RSI. It gives us a deep kind of cool-off to allow for further continuation. But that is what I'm seeing as of close today. I hope that was somewhat helpful for you and gives you some more perspective from my end. And then, like I said, I'll be updating the Twitter and things more going forward this week. So appreciate you joining. Look forward to the rest of the week and what we can bring from it.